Hi everybody and welcome to the London Session Update with myself, Kathleen Brooks, on Friday the 8th of March 2013. Well, it's all about payrolls today. Yes, US non-farm payrolls, they come out 1:30 London time, 8:30 US time. And the key number to watch out, well, there are two key numbers to watch out for. The first one is the overall non-farm payrolls number. The market is looking for 165,000 new jobs to be created in the non-farm sector in the US. Here at Forex.com, our proprietary model is actually forecasting a larger number than that, 215,000 jobs to be created, which would be incredibly healthy. The market's also looking for a 7.9% unemployment rate. Remember, that's very key right now because the Fed is tying QE3 to where the unemployment rate is. So if that does move, or if that moves higher, that could potentially mean more QE from the Fed for a longer period of time. Which the market will be watching very, very closely. Now, when you talk about payrolls, you really have to talk about dollar yen. And what we've seen this week, this here is the weekly chart in front of you. The better tone to economic data. Remember, we got those very strong ISM numbers. We also got much better than expected ADP employment. Means that we've actually seen dollar yen crack 2.5-year highs. It got above 95 yesterday. Yesterday was all about the euro and the pound, but dollar yen made steady gains and continued to move higher. So what we've got is an unusual situation whereby dollar yen is moving higher alongside stocks. Now that didn't really used to happen, but we are seeing the dollar really rally, especially against the yen right now, along with stocks. Likewise, treasury yields move. That's going to be pivotal. A lot of the good news is expecting probably a bit of a upward surprise now in the ADP, in the NFP figures, that we could be a little bit disappointed. We could potentially see dollar yen, but there's very good short-term support around about 94.80 and then at 94.55. Above where we are now, which is 95.60 at the time of writing, if we get a very strong payrolls number, we could see a shoot higher above to that 96.50 level, maybe even towards 97. But in the medium term, we think there's a crack above 95 really does open the way to 100, regardless really of the payrolls, as long as there's not like a look at is gold. Let's take a look at this gold daily chart. Well, we've seen gold bounce nicely off of that 1550 support zone, which is now a temporary low for this pair. With 1600 and then 1620 being the upside resistance levels that I've shown you in this chart. Where will gold go? Well, we think a strong number will probably mean less chance of QE, which could actually push gold down, back testing that 1550 level. But a number around consensus could really leave gold just still within this range. We're not seeing too much direction from gold. We're a little bit agnostic on the gold price at the moment. Back to above 1600 towards that 1630 key resistance level that I've marked there. Okay, everyone, have a great weekend. Please do join us next week for more. Thank you.